Great. So hi, and welcome to the Virtual Arena podcast. On today's episode, we're going to be talking about environmental sustainability and how financial institutions can embrace this and navigate the shift to more authentic and climate-friendly payments. My name is Chitua Kalio. I go by Chi, so please call me Chi. And I'm the head globally of client services at Giesecke & Devrient. And I'm joined today by some colleagues in the payment industry. So let's start with some introductions. Joe, can you please introduce yourself? Tell us what you're working on.
Cool. Hi, Chi, and firstly, thanks so much for having me on today. Really excited about the discussion. So I'm Joe Crotwell. I'm the European General Manager for Patch. Patch is a software platform for scaling unified climate action. So what does that mean? We connect companies of all sizes who want to take genuine climate action with developers of vetted carbon credit projects who are doing really innovative things to drive emissions reductions or remove CO2 from the atmosphere. So really the business has two sides. One, we partner with those project developers to help them manage and grow their business, think inventory management, pricing, payments, and that's across a wide range of solutions from tropical forest protection all the way through to engineered carbon removal projects like Farm Industrial, who convert biomass that would otherwise have the CO2 emitted into the atmosphere into bio-oil and inject it underground where it can be stored for over 1 million years, as well as companies like Running Tide, who do really interesting things to grow and sink kelp forests that can store up to 20 times as much CO2 than is possible on the land in sort of land forests. And on the other side, we provide pathways for corporates like Bain & Company, EQT, Starling Bank, to access these projects as part of their climate strategies and the products that they build through a few different ways. One, they can make one-off direct purchases, make recurring multi-year offtake agreements, or use our APIs to connect carbon credits and removal into any product experience that they offer. And at Patch, we really focus on that climate action part. So we partner with companies like Doconomy, who are experts in estimating the CO2 footprint of an action. And we really work on that sort of compensation piece for the CO2 that is otherwise emitted.
Great. So a lot in there. Can't wait to unpack some of that later. Since you mentioned Doconomy, let's go to Carl. Please introduce yourself.
Thank you very much. So my name is Kalio. I'm the Chief Commercial Officer of Doconomy. Doconomy is a fintech or climate impact fintech. We started 2018, headquartered in Stockholm, Sweden. And we have always been using innovative technologies and data to try to simplify and supporting banks to drive climate awareness, climate activation with their consumer base. Today, we have roughly 80 banks as customers, and we also work with a lot of different, credible partners to support our overall strive and our overall ambition. And I mean, G+D being one, Patch. We also work with UNFCCC. We work with WWF, with MasterCard, and a few others, because we are firm believers of, partnership will make the big difference in the long run. So, also very happy to be on the call.
Great, thanks, Carl. And last but not least, Adrian, please introduce yourself.
Yes, hello. Thanks for having me. My name is Adrian. I'm Senior Product Manager in Digital Payments at Netcetera. Maybe just some words about Netcetera for everyone who is not already familiar with Netcetera from one of our former webinars. We are a global software company founded in Switzerland with over 25 years of experience in IT development and operations. And we have more than 800 experts who support our customers in achieving their digital goals in business areas like smart mobility, e-publishing, pension technology, as well as digital banking and secure payments. And with our modular white label digital banking platform, we already serve more than 100 financial institutions, helping them to implement a digital first and also sustainable strategy to be prepared for current challenges and also future changes. So maybe a little bit connecting the dots, I would say.
Great. No, so I'm excited to be hosting this also coming from Giesecke & Devrient, which is a company that makes millions and billions of people more secure by offering various security solutions in the areas of payment, which is the topic we'll be focusing on today, but also connectivity, Internet of Things, identities, digital infrastructures. We're based in Munich and we've been in existence for 170 years, and we have various partnerships with governments, with banks and companies like you, which is a very unique roundtable we have here, because Giesecke and Devrient is partnered with each of your companies that you represent. So let's get into it. Thanks for that introduction. There's been a lot of discourse lately about, how human beings are accelerating climate change and the impact that we have on the environment. We've seen a lot of extreme weather events, a lot of different catastrophes happening of late, more frequently because of this climate change. But I think most people probably don't typically associate financial institutions with this climate change or any kind of action they can take. But there really is a link, and that's what we want to talk about. In the payment industry, and for example, if you think about the payment cards that banks or other financial institutions produce, the manufacturing practices behind that, the materials used in the cards, as well as the downstream behaviors for how the end users dispose of those cards and throw them away at the end, all of this has an impact on the environment. Today, there's more than 3 billion chip payment cards that are made every year, and we see this number steadily growing. So this is material that is circulating on the earth and in the environment, and this clearly has an impact. So the type of material that we use, for example, can dramatically minimize or offset that impact. And we see also that consumers, more and more, they're demanding that companies be more climate conscious, and that financial institutions have a responsibility here as well. So all in all, there's urgency really to take action and reverse or minimize that damage. And companies more and more are trying to address this in one way or another. Some of it is genuine, but some of it's also not. And then that's where we get into the topic of greenwashing. So it could be difficult to tell, especially as an end user, as a consumer, whether that company and what they communicate is really authentic, if it actually is polluting less, or whether it's basically just a PR ploy, trying to jump on the bandwagon to get good PR. So Joe, based on your experience and what you've seen in the industry, why should financial institutions care? And how would you also define greenwashing based on what you've seen?
Yeah, thanks, Chi. And I think before sort of thinking about why they care and defining it, I think it's important, as you sort of have, to take a step back on why this is a concern and why we think sort of greenwashing claims happen today. So firstly, as we all know, there's no escaping it. We're in the midst of a climate crisis today, with impacts already being felt around the world by the most vulnerable in our society. And the reality is that the key driver of that is we're still emitting 55 billion tons of CO2 every year. Our atmospheric levels of CO2 are 1.5 times higher than they were before the industrial age, and that's causing global planetary temperatures to rise. So in order to sort of minimize the worst impacts of the climate crisis, the UN's IPCC has said we need to both massively reduce our planet's CO2 emissions, as well as scale our capacity to remove CO2 from the atmosphere. And therefore, sort of real action across all of that stuff is imperative. But at the same time, companies are seeing, related to that, there's actually a business benefit for being seen as a green business. We're seeing companies and products with ESG claims grow revenue disproportionately to companies and products that do not have that. I think McKinsey released some data showing that products with ESG ESG credentials grew 28% in revenue over the last 5 years compared to those that didn't, growing only 20%. So the business sort of impact is real. And I think it's that incentive that's meaning that companies are choosing, wanting to be perceived green and to be acting sustainably. And so what we understand and believe greenwashing to be is really when those market actors do things to make it seem like they're taking credible climate action in order to benefit from that halo effect, at being sustainable, but without actually doing something meaningful for the climate. So some examples would be advertising a climate value like carbon neutral products, but without actually having taken any action to make that a reality or build a sort of credible long-term plan, or vague or exaggerated advertising claims. I think innocent drinks in the UK were recently penalized by suggesting that buying innocent products would help fix up the planet. So I think it's about being sort of really robust in what you're talking about. And I think it's also, to set context, helpful to think that, there can really be two types of actors in the greenwashing space. Of course, you can have the sort of bad actors who are intentionally doing this. They're looking for cheap solutions to market. We're not really considering the impact of the strategies they're taking. But there can also be good actors who are claiming what they think is really valuable work for the environment, but because there's a lack of transparency in certain parts of the market and it's hard to understand or see the impact that they're taking, actually the impact isn't really there. And in the carbon markets where we play, that's historically been an issue of transparency and something that platforms like Patch are looking to solve. So I think it's great we're talking about this today. Making sure that companies can act with integrity is really, really important, because there clearly are businesses that are abusing green credentials for their own profit, and we need to call out and address that. But at the same time, I would encourage us to recognize that a lot of the solutions we have for the climate crisis are still nascent and imperfect, and we want to avoid the fear of greenwashing accusations actually stops credible businesses taking climate action in the first place, which is something we're starting to see. We can't sort of let perfection get in the way of progress. We just don't have the time. And then I think the other thing that we see from a greenwashing perspective that's important for companies and the wider industry to bear in mind is actually sometimes we see that companies are taking action, but because they don't have enough confidence in their plans or how it will be treated, they're therefore afraid to talk about it. And we sort of refer to that as green hushing. And that's actually can be equally problematic. Like, we're still early stages in the climate crisis. We need businesses to be taking bold action and inspire others to do that, not sort of be afraid of talking about the good things that they're doing.
So greenwashing, green hushing, these are very interesting terms now coming into the vocabulary. But just going back to what you said about the transparency and having good visibility of that impact, I think that's really an important key and a good place to start in terms of creating awareness. Maybe if I turn to Carl, just to get your take, what's your take on greenwashing?
I think to start with, if we take a bit of a step back, I mean, you also asked, around why should banks care and what's their incentive? And I think if you think of it, and thinking of the entire payment industry, it's with a specific payment, that's actually where the impact happens. And banks realize that. And obviously they have realized their obligation to also them to create that transparency or support that transparency. I completely take the point from Joe that there is no, perfection. It's dangerous to strive towards perfection at this point, because there are no standards, no proper, governance around exactly how to manage this, and that's why people get a bit cautious, and that's also the nervousness around getting accused of greenwashing is obviously apparent, especially among banks. But that doesn't say that one couldn't do everything right, but everyone can do something. And that's very much, I think, all our businesses are really trying to support that mindset. And I think, we clearly see that banks are genuinely interested and excited to support here. They're also, exploring, it's quite foggy, but they really want to get ideas and inspiration on how to support their consumers to take action. We clearly see that.
Mm-hmm, absolutely. And, only recently in the EU, for example, has there been legislation proposed to define greenwashing and to try to regulate the kind of behaviors associated with that. So it's growing, it's being discussed more and more. And, I think that the extent to which we can offer solutions and tools to support financial institutions to do what they can, however they can, is only a positive thing. Just also pointing out what I have in my background, this pledge, right? We've been seeing companies make pledges more and more to reduce their impact. The one that Giska and Devrient made recently was to reduce the use of first-use plastics in payment cards by 2030. MasterCard made a similar pledge, but by 2028. So, these are incredible and effective pledges to help really close this loop of recycle, reduce, reuse. And I think also in this industry, in the payments industry, the card itself can be a strong symbol that then makes a bold statement, from the financial institution to the consumers that they are taking action, that they're willing to combat climate change. And it's backed by credible metrics that can be measured, that can be monitored, and can be used to create transparency as well. So whereas greenwashing, on the other hand, is more communication rather than the action. So it's important for banks to help them try to see the difference so that they can also figure out how to really be genuine and authentic in what they communicate to their end users, and also protect them and protect the environment, as we're trying to work our way through this sustainability journey. Also, in terms of how banks can empower them to make action through projects like what you were mentioning, Joe, all those interesting projects that Patch offers to be able to offset some of the carbon footprint and impact that we have. I think that's brilliant. So if we think also about how, Carl, what you were saying, how financial institutions can incorporate sustainability into their business strategy, how can they do this effectively in such a way that is authentic and, avoids this trap of greenwashing?
I think to start off, it really needs to start with education of executive teams and education of bank employees, etc., in order to properly advise customers and knowing how to navigate the landscape. You spoke about your background. I think you see my background as well, and in the way we are trying to help bank engaging with their consumers, because at the end it is very much about the activation. You need to have interest, you need to have excitement, you need to motivate people to take action at the end, and that's very much how the role we try to play in this ecosystem. We see from studies that bank consumers, or consumers in general, they take it seriously, they want to take action, and as such, clearly that the bank is keen to play a role there is completely certain from our perspective.
Great, no, thanks for that. And Adrian, what's your take? What do you think financial institutions can do to really incorporate sustainability into their business strategy?
Yeah, I think important to say here, if we are talking about incorporating sustainability in an authentic way, from my point of view, this also includes that the taken measures are also audited by an independent and reliable organization. So I think we all know these nice looking green colored logos showing a tree or a leaf, which are printed on the packing of a product or visible on the homepage of a company, which actually makes us believe that the product or service we buy is green. But due to the abundance of such logos and also the missing regulation, which has already been mentioned also by Joe, there is the danger to fall victim of greenwashing, even if you actually want to act sustainable. So I think, therefore, if we are talking about how financial institutions can incorporate sustainability in their strategy, a key factor there is also to select their partners very careful with a proper due diligence.
Mm-hmm. Great. And I see you nodding, Joe. I know you want to jump in. What would you add to that?
Well, firstly, I feel left out for not having a snappy background. No, look, I agree with all of that stuff. I think, I think banks and financial institutions have such a critical role that they can play in the industry, both because of often their size and scale and their footprint. Secondly, the customer base that they have and the role that they can influence and drive action amongst that. And then lastly, the projects and where their financing goes to. I think the other thing to add into that I think is the cornerstone of a really robust climate strategy is, I think, as Carl mentioned, this education and starting at the top and having what is that corporate level climate commitment that you want to make. to make sure there's an overarching strategy to everything that you do. At Patch, we often advise with companies who use SBTI, or the Science Based Targets Initiative, which is an independent organization that creates guidelines for companies to set net zero targets and helps make sure that the plans are sort of consistently in line with the things that we would need to do as a planet to meet our commitments as part of the Paris Agreement. It's a combination of extremely sort of robust and drastic emissions reductions, with the ability to also compensate and overcompensate for the emissions that you still have today with carbon removals. So I think having that plan is really important. And then I think once you have a strategy, you need to make sure that you have, that you sort of track towards it. So there needs to be interim targets rather than just a sort of, hey, I'm going to do this thing by 2050. We need to make sure that executives are held accountable for progressing towards that, and then also retaining some flexibility to iterate and improve over time. The climate science is evolving incredibly quickly, so of course we want to make sure that there's room for that. And then I think beyond that, there's the opportunity that financial institutions have to amplify that impact across their network. So that can be through educating and driving action for their consumers in the way that sort of what the Doconomy does. It can be through impacting the supply chain and helping them scale and improve their sort of net zero and climate credentials. And then it can even be companies that choose to go beyond net zero. And not a financial institution, but Microsoft have made a commitment to be carbon negative by 2030, and I think removed all of their historic CO2 emissions from the atmosphere by 2050. So I think there's even scope to go bolder than net zero, and that's something that we're seeing companies take.
Great. Yes, it is great that more and more companies are taking bold stands like that and making pledges and so forth. We see signs of this in the industry as well, in terms of the usage of more and more sustainable materials in payment cards. Things like ocean plastic, or taking compostable material, or using recycled plastic. Those numbers have grown significantly. So from 2021, where 8% of payment cards had only 8% had sustainable materials, it's projected to grow to 27% in 2026. So we see, just taking from what you're saying, starting with the business strategy of a financial institution, the materials they source, having awareness, creating transparency, and also putting management attention, demonstrating the leadership in taking those kind of actions, making bold statements, and then having processes end to end to really have a holistic approach to meeting those environmental goals is so important. And then having the transparency as well to track and to monitor the progress of those pledges and those stands is so critical. But of course, all these things maybe sounds easier said than done. It's a little bit complex to put everything into place and to get everything lined up. So going back to you, Adrian, what are some of the biggest challenges financial institutions face when it comes to establishing and really maintaining these climate friendly, or green as we call them, the credentials?
Yeah, as Netcetera is partner of many financial institutions, of course, we also have some insights into this kind of challenges you are mentioning. And I think financial institutions in general have a critical role to play, because as a capital provider, they are heavily involved in managing the transition from a fossil fuel dominated economy to a more sustainable one. And it has already been mentioned that that's also the reason why financial authorities all over the world have proposed or even already introduced sustainability-related disclosure rules, standards, and metrics. So I think from my point of view, one of the big challenges for financial institutions is, or will be in the near future, to comply to these regulatory rules. And on the other hand, what we also see is that consumers nowadays are more eco-minded, and also expect firms, including banks and financial institutions, to be ESG and green-minded as well. So this is becoming more and more a hygiene factor, actually. So if we are talking about green credentials, this means also how to show that you believe it is important to protect the natural environment. So another challenge for financial institutions, from my point of view, will also be how they can show that in an understandable and also transparent way to an average consumer who is maybe not too familiar also with annual reports and the like.
Mm-hmm. No, absolutely. Carl, what is your take?
No, I mean, if I just may jump in here, because I think it's what is important for banks, I think, is not to think that, you know, the consumption is nothing bad, right? We all need to consume in order to survive. I mean, all this that has made, you know, mankind successful to some extent, right? And I think, you know, it's all about trying to motivate more conscious consumption at the end, and that's the role that banks are starting to realize that they play in this ecosystem. And that's we find ourselves often entering into that discussion. What's actually the driver and why? And we're really trying to inspire that thought. And I think the challenge that the bank then is facing is, okay, but how do I then make money out of this? Because at the end, a bank is to some extent there to make money, right? And first of all, I think if you don't have that sustainable business model, you will be out of business anyhow. Whether that then takes 5 years or 10 years or 50 years, no one of us knows. But we know that will happen at one point because of regulatory pressure, because of expectation from consumers, from corporates, and then also at the end, the shareholders. So I think there's no way around it. I think what they're struggling with is how to drive engagement with their consumers. How do you actually make it inspiring and engaging in a way that doesn't demotivate consumption, but create that more sense of conscious consumption? And that's an area which we find exceptionally interesting. We are, you know, spending a lot of time to really try to understand what happens in the brain of the consumer, and you know, how can you at the end drive wider business value? Because at the end, we often enter into the conversation around the return on investment type of conversation with the bank, and that's very logical. So at the end, we are looking for those economic measures to drive that understanding and that a realization, if you want.
Yeah, and I like that term that you used, conscious consumers. And, you know, that applies throughout the whole chain in this discussion, you know, in the payments industry. So on the one end, you have banks and their practices having consciousness in terms of the investments they make, the suppliers they choose, their carbon footprint in their internal processes, paper waste, you know, all of this. And on the other end, you also have their customers, you know, how banks can really empower them to have this awareness through the apps they provide for their users, how they interact with the bank, but also through maybe some of the projects, for example, that on some of your platforms, Joe, you know, to take action to really offset the impact that they do have, because we all have impact and we will continue to have impact. It's more, how do we minimize it? How do we be aware and consciously choose the kind of impact that we want to have? Joe, just thinking about that, you know, what's your take on how to help financial institutions really overcome some of these challenges?
Yeah, I think there's sort of a few things. I think there's obviously sort of building that plan and that strategy that we sort of talked through, and then I think I do think that transparency piece that we talked about earlier is really important, because I think banks need to make sure that they can stand behind the sort of the action that they take, and help their consumers and their business customers also take the most sort of robust action. So you mentioned, Chi, some of the projects that we work with. I think, you know, a great opportunity to talk about some of that stuff. I think it's far more interesting than the sort of software. So one of the projects that we work with, one of the highlights is a company called Brilliant Planet. As you know, or you may know, marine algae blooming, actually using photosynthesis as an amazing source of capturing CO2 in the oceans. But typically the algae will die and then the CO2 will be released. But actually, what these innovative companies are doing things like genetically engineering the algae to make sure it has a highest sort of photosynthesis potential, growing it in coastal deserts, and then before it can release the CO2 into the atmosphere, actually drying it so that the CO2 remains locked in, and burying it underground to store for over 1,000 years. And that sort of new innovations like that have the potential to sequester hundreds of millions of tons CO2 permanently, which is a sort of critical thing that we need to do if we're going to go from a world today where we durably remove, tens of thousands through to sort of millions of tons of CO2 per year, all the way to needing between 5 to 16 billion tons per year removed by 2050 to mitigate the worst sort of impacts of the climate crisis. So I think there's so many examples of interesting projects like that, but it's really hard actually for the average consumer or business customer to understand what they're doing and also access that. And I think that's where the role that banks and financial institutions can play a huge part in, both in utilizing platforms like Patch to bring transparency and information through to their customers, so that they can have understand the high integrity ways that those businesses are operating, but also through the interfaces through to their consumer customers or through payment forms to their business customers, let them easily contribute into those projects that they otherwise may not be able to.
Absolutely. And we've been talking a lot about the physical world. Let's transition a little bit and talk about the digital world. Often the payment card is a link between the physical and the digital. The card is what the end user uses to manage their account, to access payments and so forth. But there's also a digital component that's very much tied to that in terms of how they interact with their accounts and so forth. Adrian, the partnership that Netcetera has with Giesecke and Devrient is a special one. What role does that partnership play in terms of enabling financial institutions to offer more authentic approaches to sustainability also in the digital world?
Yeah, thanks for this question. So I think first, it is important to understand that we, both G&D and Netcetera, perceive ourselves not just as product or service providers towards our customers, but rather as partners. And I already mentioned it before, especially for financial institutions which are closely monitored by regulators, but also by public, it is crucial to select partners who fulfill required standards. So if we are talking about providing authentic approaches to sustainability, this also means that we as partners must commit to sustainability, and we do that. So Netcetera became part of G&D Group beginning of this year. You have mentioned that as kind of a special partnership. And G&D actively advocates for ecological development. Just to name one example, by 2040, G&D intends to reduce its emissions by at least 90% compared with 2020 and achieve net zero across the whole group. But of course, G&D's strong commitment to this sustainability is not restricted to its own business activities. An environmentally friendly range of products is likewise also important for us and for a sustainability strategy. And referring to what I said before, acting as a partner, we are always close to our customers also to really understand their needs and provide them suitable solutions. And this nowadays includes, of course, also sustainable solutions. And I think as one of the world's leading providers or producer also of solutions for payments, connectivity, identities, and also digital infrastructures, as you have mentioned before, G&D has a significant scope also for assisting client companies to meet their own climate goals. So you have already mentioned, for example, that G&D has developed a card made out of recycled plastic waste, which is recovered from world's oceans. But focusing more on the digital part, which you have asked before, so we have already talked a lot about this customer journey, which a customer must take. So let's call it consumer sustainability journey. Yeah. So reaching from measuring the climate impact, raising awareness, and finally also taking action. So this is kind of the goal which we would like to cover, and that's why I'm very happy to be here together with Joe and Carl from Doconomy and Patch, because actually we work together with Doconomy and Patch to enable with new services exactly this kind of end-to-end customer journey. So what we will do is that we will enable merchants, payment service providers, but also card issuers to provide their customers an easy accessible service to raise awareness and also create an understanding of the climate consequences of daily consumption, and also how to address those on an individual level. And the advantages of these digital white label solutions will be that, first of all, they can be easily integrated into an existing ecosystem, like a merchant website checkout process, or also an existing banking app. Second, that they use only minimal, non-sensitive transaction data. So there is no need to share any personal details with third parties or something like that. And third, they cover the whole sustainability journey, which I have mentioned before. So starting from measuring the climate footprint, educating also the customer about their everyday climate impact, and also activating them by enabling the customers to offset their footprint, making use exactly of the services which have already been described from Doconomy and from Patch. And with these products, namely Ecom Earth and 2Pay Green, we transform already available transaction data into something meaningful and enable exactly this consumer sustainability journey.
Yeah, I love that. And I think it's really exciting, especially, as payment offerings expand more and more into the digital area. If you think about the life cycle of the end user, there's both, at each step in the process, there's both a physical and a digital component, right? So, the issuing of the card, the letter, the paper mail that comes with it, how the card gets recycled, all of those different steps offers both a physical and a digital element, which is an opportunity to create awareness and also give the users and financial institutions consciousness and choice in terms of how they fulfill those different steps in the process. And I think please jump in, Carl.
I may jump in there because we are very inspired by the actions taken by Netcetera and really support that initiative clearly. When we speak about that, digital journey and getting that consumer from, understanding, measuring understanding, and then activating, and that's not such an easy step to take. In all honesty, that's what we have experienced, and we are exceptionally excited of having acquired a small company called Tech. And the reason why we did that was we see them having one of the best engagement engines and behavioral science engines there is, really trying to use, behavioral science to figure out how you actually drive that step towards activation. And I think more and more of discussions around how to utilize the digital tool is to making sure that you manage to knock into the consumer to take that proper action. And I think the next couple of quarters will be quite exciting in that regard, as we are slowly merging, behavioral science and climate action. Having all that said, we also need to keep in mind that climate action is not only about, carbon, it's also about water, it's about biodiversity and a lot of different elements that I think, as this sector matures, we'll find new ways and approaches to resolve, support resolving, I should say.
Great. Joe, what are your thoughts on that?
Yeah, no, I agree. I think more broadly, I think that capacity and capability to scale action across the customer base is incredibly important, and that's I think why we're really excited about that partnership with Doconomy and Netcetera G&D to make it very easy for that end-to-end flow through from understanding the footprint, through from educating, through from reducing and changing behaviors, all the way through to compensating for the pieces that you can fall neatly within one journey, because all of those pieces I think are important for us to drive the climate action that we need to do to mitigate the worst impacts of the climate crisis.
Right. So it's really great to see it all come together, even on this webinar, right? All the different pieces that are existing in that end user journey, and how each of our companies comes together in this partnership to drive positive impact and change on our environment in that regard. So now we've talked a lot about, why it's really important for financial institutions to really see the urgency, to really take meaningful action that can be measured and, that isn't greenwashing, and how they can overcome some of the challenges maybe in terms of making those steps and taking that action. And we've also seen that in the European Union, a lot of companies and financial institutions have been taking action lately to minimize their impact or use more recycled materials or ocean plastic materials and so forth. Adrian, what would you say is, what is one piece of advice you would give to financial institutions to help them accelerate their progress on this authentic sustainability journey?
Yeah, I think I'm thinking just about the famous quote, which says, you can't improve what you can't measure. So I think if we are talking about the sustainability journey from a bank's or financial institution perspective, the first step is also to start measuring the environmental impact of the financial institution, but as well also of their customers. But as we have already heard that this sustainability journey comprises of several steps, I think it is also key to rely here on partners who already have the necessary expertise in the different aspects of such a sustainability journey. And that's also the reason why we have actually partnered with Doconomy and Patch. And I think just referring to what Carl has said already, because we are talking here about financial institutions, so at one point, I think it comes down to the question, okay, how can I make money with something like that? And I think if we are looking at the acronym ESG, it already indicates that it is not just about environment, but actually also governance is a part of that. So meaning responsible corporate governance. And from my point of view, this also means that organizations have to secure their existence also from a financial perspective. And I already read about studies which show that more than a third of consumers are even willing to pay more for sustainability. So I think that's also something which has to be considered when thinking about integrating or starting this sustainability journey, because besides of the clear environmental responsibility, there is also a business opportunity for financial institutions who adopt an overarching sustainability strategy now.
Mm-hmm. And I think that's great in some areas of the world where they have the financial means to pay more for such initiatives, can almost be seen as a luxury, right? But maybe turning to you, Carl, for other areas of the world that maybe aren't as advanced as the European Union countries, what advice would you give to them to get started on this journey?
I was thinking of that. Do you want to be a fast or an early adopter or fast mover or not? I think banks, per se, they are obviously conservative and they should be, protecting their money, etc. What we have seen is that there is no, and it drives us to some extent crazy, because it's no one size fits all in the sense of figuring out where to prioritize the focus. We see countries who are exceptionally well advanced who don't care, or banks from exceptionally well advanced countries. We see very, very advanced banks from, very non-advanced countries or challenged countries. I mean, we were talking before, about like Cambodia, like Ukraine, places where clearly you're fighting for life in a different manner than you do, in like the Western European countries, like where we sit now. And I see that is being fascinating, that we see interest in Cambodia as we do in France or in Sweden. And that I find very, very fascinating. And it's also a bit schizophrenic for us, because it means, we get inquiries from around the world. It's really hard to focus. We are a team of 100. And how do you make sure that you get the best impact for your efforts? And that's also why we need to work with partners like Netcetera, because you get a different scale and a different reach if you do so. But at the end, it doesn't really feel like you need to be a different type of country in order to be interested, because we see it everywhere. That would be my observation, at least.
Yeah, and linking it back to also what we were discussing at the beginning of this conversation about where we see extreme weather events happening in places in the world that are really experiencing the effects of climate change more than others. Through some of these offerings that you guys provide through your platforms, there is also probably an opportunity in terms of investment decisions or, projects like what you offer, Joe, with Patch, where consumers can choose to pay for projects that help in other parts of the world as well.
Yeah, for sure. And I think, look, ultimately, we see customers and businesses having sort of geographical preferences of where they want the impact to happen. And that can make sense because there can be a lot of other co-benefits around, around forest protection or creating jobs for those projects to happen. Obviously, from a pure climate perspective, it doesn't really matter where that ton of CO2 happens. What really matters as a planet is that we reduce the CO2 emissions that we have, and then build the capacity to remove CO2 so that we can stop the planet heating, which is obviously what's going to cause the worst impacts to people, especially in the developing world. So I think, my sort of thoughts for financial institutions and really what they can do to get started, and advice is one, of course, build a plan that we talked about, make sure that you can execute on it. I think two is don't sort of only stop at driving reductions. We need both reductions and removals to scale in parallel to get to where we need, and as part of to mitigate the worst impacts of the climate crisis. And then lastly, I think around sort of greenwashing piece is be totally transparent about what you're doing. Make sure you're working with partners and platforms that can give you transparency into the actions that you're taking, and be open and transparent about sharing what you're doing more broadly. I think that can really sort of help mitigate any risk that you have.
Yeah, great, absolutely. So, having going back to this term climate conscious, I really like that. Having this kind of mindset is so critical in this discussion of climate change, climate impact in our world and in our industry. Having that consciousness, having the transparency, having management intention to support in the financial institutions to really drive directives that will have impact and reach, and also for end consumers then to take meaningful actions based on that information in terms of how they consume and how they behave in this world. It's been really an insightful discussion. Thank you so much for your participation and the insights that you shared here. It's been a pleasure having you all on the virtual arena. And I also want to say a big thank you to our viewers, all of you. Thanks for tuning in. You can also catch the rest of the series and much more over at ffnews.com and of course on LinkedIn. Thank you. Goodbye. Take care.